Here's Johnny.
Out of these three houses, which one do you think is for sale at over $1.3 million? First, you have a 2,900 square foot house on 3.5 acres with 4 bedrooms and 3 bathrooms. Second, we've got a 3,200 square foot house on 7,800 square feet with 4 bedrooms and 4 bathrooms. And lastly, we have a 1,200 square foot house on 1,900 square feet with 3 bedrooms and 1 bathroom. If you picked the last house, unfortunately you would be right because this house is located in San Francisco. Even with a recession potentially lasting throughout 2023 on hand, and real estate listings sitting stagnant in the market, sellers are refusing to lower prices to competitive levels. Last November saw a record delisting rate on homes for sale at 2% a week. Many homeowners just don't have enough equity left in their house to cut prices. It was announced that around 270,000 people who bought during the past year now owe more on their house than it's worth. In the third quarter of 2022, 450,000 borrowers went underwater in debt, 60% of which had taken on mortgages in the first 9 months of this year. This number accounts for around 1 in 12 homes purchased this year. A 2021 Zillow survey showed that 40% of millennials were comfortable buying a home online, and almost 60% would buy after getting only a virtual tour without seeing the house in person. It's not surprising that many of them are now feeling the effects of buyer's remorse. Gold is becoming a big subject again as a possible hedge against declining assets, with big names like Peter Schiff and Robert Kiyosaki saying it's undervalued and on track to hit $3,000. Who knows, maybe T-Pain's big-ass chain was a smarter investment than you'd think. The rappers could have the best investment portfolios out of all of us. Peter Schiff can say what he wants, he has to drive up business somehow, although I think I'll always have my reservations. If you look at where gold has gone since 2008, even with the 2010 gold bull run, it's barely outperformed inflation. In all this time, you would have just doubled your money in gold, where if you compared to any random tech company like Apple, you would have multiplied your money by more than 20. For example, if you put $100,000 into Apple stock in 2008, today you would have 28 times your money for a return of $2.84 million. If you bought Amazon, you would have 26 times your money for a return of $2.6 million. Alternatively, you could have bought gold at $1,000 back in 2008, and with $100,000 invested, today you'd walk away with a grand total of $180,000. And that's before you take into account trading fees. Gold definitely has its place as an investment, and I think if you can afford to hold some, you might as well. It's a stable thing to buy, and if you buy at a good time, it's hard to lose money on. The best thing you can do is to have your net worth spread equally across a large investment portfolio. This strategy is recommended by a ton of successful investors, and although the potential yield is lower than buying a larger share of a higher risk investment with bigger potential for growth, it's more secure by miles to buy shares of many different investments and hedge your bets because nothing is certain. It's a good way to buy into a large group of successful companies without needing to do much research is to buy into an index fund. These companies hold stable investment portfolios that expose the investor to a broad selection of stocks. One big name in the index fund you may have heard of is the S&P 500. It may pay out to wait for the full swing of the recession to buy, however, it's not important to buy at the very bottom. The general consensus is that time in the market beats timing the market, and your money's worth more the sooner you invest it.
Check on that. Whole another kilo right here, boy. Big boy shit though.